Now just a few passing remarks with respect to the discontinued operations and changes in accounting principles. Here we will assume that the income statement that we were working was for the 2012 actuals, and this company has been operational for the past 4 years, including 2009, 10, 11 and 12. Now if you look at the segments, there were 4 segments which we were discussing when we were talking about the discontinued operations, and all these 4 segments were operational till the point of 2011, and in 2012 a decision was taken so as to discontinue segment number D. So what we noted was that segment number D will be virtually absent from future years, and only 3 segments will be present going forward. So what GAAP mandates is that the past income needs to be restated. What this essentially means is that if the business is in operations for 4 years, the segment that was discontinued should be shown as a separate segment altogether, and it should be restated. So all these numbers will get restated, and like the one it was reported in 2012, all these 4 segments get restated historically. So for discontinuous segments, this is what you need to do. Now coming to the second important thing, which was changes in accounting principles. There's a slight difference here. When we talk about changes in accounting principles, we are talking about changes in inventory valuation methods from LIFO to FIFO, or let's say changes in depreciation policy from straight line method to accelerated depreciation method. So in this case we don't kind of restate historical numbers, but what we do is that in this current year of 2012, what we do is we actually present a cumulative effect of the accounting changes in the year in which the changes were made. So this is what we do when we talk about changes in accounting principles. So please note the difference. One, when the business segment is discontinued, the past income is restated by separating the discontinuous from the continuous segment, and when it is about the changes in accounting principles, we just include the cumulative effect of the accounting changes, and we don't kind of restate all the other set of numbers here. We only include the cumulative effect in the current year in which it was reported and the decision was taken accordingly. And when it is about changes in accounting estimates, we have noted that the changes are reflected below the line, and these changes are incorporated in the current year as well as future years, but not considered retrospectively. So there's no cumulative impact. The impact is only current as well as in the future years if applicable.